Hello and welcome to MasterChartsTrading.com market recap for the week ending Friday, October 31st, 2014. In this week's video, we will look at S&P 500, which is bullish and at new highs, but overbought, and profit taking may commence anytime soon. The Russell 2000 is rapidly catching up to large cap stocks, also is overbought, and the profit taking may also start pretty soon. The bonds are ready for a rebound, however treasuries may still have a little more to fall or to correct through times sideways. Gold and gold miners had a terrible week, broke support, and continued their long-term downtrends. Commodities are ready for a counter-trend bounce, especially oil, which has stopped falling. And finally, money may be rotating into energy equities such as XLE, S&P 500, SPDR, Select Sector Energy Fund. So let's take a look at S&P 500. The long-term picture still remains intact. It's a long-term bullish. The long-term bullish goes back to 2011. Latest buy for us was on October 21st when the S&P 500 rebounded from the low, from mid-October low. We entered on October 21st. It was slightly late entry, but I believe the reason for that was because the sell-off that started here in September was quite significant and broad-based. So I decided to wait a little bit for the entry. And even though it was a little late, we're still up about 6%, about almost 6% in just a few days. Now we're overbought. You can see the price momentum oscillator is overbought here, and profit taking may already have started and will likely commence soon. In our backtesting models, profit taken when price momentum oscillator has crossed to bearish was not as profitable when the red rune have crossed back up to 100. So it's better, in my opinion, to wait for the red rune to go to 100. You can take profits here, but overall, the average profit from each trade will probably be higher if you take profits when the red rune goes to 100. So the same goes for Russell 2000. The Russell 2000 is a little bit different because it actually made a double top right here in March and then in July, and then it sort of fell apart afterwards. So here in October 7th of this year, the Russell 2000 actually became bearish in my book. So this bounce is a counter trend bounce. Nevertheless, this is a very strong counter trend bounce. So from here, from the entry point, we were up about almost 7%. And also price momentum oscillator is overbought, so the profit taken likely will commence soon. But the rune has not yet surged to 100. The red rune has not surged to 100. So we're still waiting for the opportune moment to take profits. Now let's take a look at the bonds. The bond picture is also bullish. Long-term bonds are bullish. So we're looking for a entry opportunities within a bigger uptrend. The latest buy was on October 1st of this year, actually a little earlier right here, and it resulted in about almost 2% gain. This is a strong rebound for bonds because of the bullish fear most likely. So now we can see that it actually has already crossed over. The PMO has already crossed over. So we're waiting for the rune to surge to 100, and then we'll re-enter the general bond funds, such as AGG in this case. let's take a look at treasuries. The treasuries 1-year plus treasury bond fund TLT has not yet corrected to the point where I can say that it's a good entry opportunity. The price momentum oscillator has not crossed over yet the bullish territory, and neither have Arun, obviously, still at Arun red at 100. So we may want to wait a little more for TLT to correct either through time or through price. See where it goes. The last entry on October 1st, actually a little earlier probably, resulted in about 5.5–6% gain, and we usually use a triple leveraged fund such as TMF, so that's about 15–20% gain right there, just in a few days. Let's take a look at gold. GDX, which is Gold Miners ETF, just had a horrendous week. It collapsed almost 16%, just over, in only 5 trading days. That reaffirms the longer-term downtrend that has been in place since 2000, just a few years already. So let's take a look at the hourly chart. And the hourly chart, you can see that we had a short signal. Our system gave us a short signal on September 5th of this year, and this would have resulted. This position is still, this short position is still open, and it's almost 31% gain. This position right here, it's still open. This counter trend bounce truly never materialized, because on October 8th of this year, GDX did rebound about, I believe, about 8% or so, but you can see that Arun did not actually get up to 100, so we didn't even issue a counter trend bounce, and eventually it rolled over right here. The PMO rolled over, and then eventually it just crashed. So this was like 12–13% in just a day or so. So this reaffirms the longer-term picture of gold equities being bearish. I don't exactly know where the counter trend bounce will begin, a tradable counter trend bounce to the upside, but it has happened in the past, and you can see right here on June 18th of this year, it was a definitely tradable counter trend bounce, about 12%. The Arun did surge, the PMO did cross. This was a tradable counter trend bounce. Right here as well, very good counter trend bounce, tradable. It was in January of this year. PMO crossed here, and then Arun surged as well, right there. So this would have resulted in about a 21% gain counter trend. So we'll see where it goes. Now the oil has been sliding for a while now, and what's interesting is that I believe it has found at least a temporary bottom. You can see that there is attempted selling, like this candlestick right here on the 27th, a hammer, and also on the 31st, another hammer right there. But there seems to be quite a bit of support in this area of $79. So it's possible that oil has indeed found support. And as a result, gold equities, such as XLE, which is a Energy Select Sector SPDR fund, XLE, have actually started gaining earlier than the oil itself. XLE turned bearish on October 10th, in my book, but it started a rebound, and also a tradable counter trend bounce started on the 21st of October, up about almost 4% since then. And you can see that oil kind of traded flat, but the energy equities actually rallied about 6% or so. So it's possible, and you can see that PMO is not overbought, and it's still rising and has not crossed over. The green rune still above the red rune at 100, so XLE is gaining, and I believe we may see further gains in XLE because the oil potentially has stopped falling. Of course, if oil continues this downtrend, then it's possible that XLE will roll over as well. If it does roll over, we'll just take our profits here. Well, that's it for this week. If you have time, please sign up for our mailing list at MasterChartsTrading.com, MasterChartsTrading.com. If you have a Twitter account, connect to us on MasterCharts at Master_charts, on Facebook, MasterCharts Trading, and public charts on StockCharts.com. You can see at this address right here. But let me show you how to get there through the StockCharts.com website. So if you go to Home and click on Blogs, right there. Yeah, there seems to be some sort of a glitch. Anyways, if you click on Blogs and then scroll down to the bottom there, you will eventually get to Blogs, and then just find our blog there, MasterChartsTrading.com. Here we go. It's loaded, and it takes a little while. So view public charts right there, and scroll down. Take a moment and load. All right, here we go. Right there, MasterChartsTrading.com, alternative view of stocks, bonds, gold, and commodities. And all of the public charts that I described there in today's video are there as well. Once again, thank you for listening and have a great trading week.